We're going to get started today. I want to welcome you to the EFF Zoom video financial series. My name is Lisa Strahs-Lorenc. I'm Director of Community Relations for Equity First Foundation. We are a not-for-profit organization, and we offer financial information, resources, and education. Today, I'm happy to welcome one of our board members, Timothy Kennedy, CRMP from U.S. Mortgage Corporation. Topic today is, hey retirees, looking for a tax-free source of income. Tim will give us information about this important topic.
Hi, Lisa. Thank you. Thank you for having me. Pleasure to be here.
Okay, Tim. So why don't we start by giving you, the listeners some information about your background and your experience.
Sure. Well, thank you for having me. And listen, we're in unprecedented times, so I wish you and your family well, and the community well, right? And my thoughts and prayers go out to everybody that's experienced COVID-19, and for the first responders, thank you for your service. Thank you. My name is Tim Kennedy. I'm with U.S. Mortgage Corporation. I've been with U.S. Mortgage for about 10 years. I'm in the mortgage industry for about 25 years. And at U.S. Mortgage Corporation, we've been in business, gee whiz, I think we're going on 26 years. We're licensed in 48 states, the District of Columbia, and we're a direct lender. So we can do any type of lending that anybody's looking for, mortgage related, right? FHA loans, USDA loans, VA loans, anything, renovation loans. And what I talk about a lot and what I promote as a tax efficient retirement income tool is the home equity conversion mortgage, reverse mortgages, right? I'm a certified reverse mortgage professional. I'm actually one of 140 certified reverse mortgage professionals in the country that designated specifically as a reverse mortgage specialist.
Oh, so reverse mortgages. I've heard that name before. Historically, they've not had just a great reputation. Why do you think they deserve a second chance right now?
Well, you're 100% correct. Reverse mortgages have not had a good reputation in years past, but as of 2013, they passed the Reverse Mortgage Stabilization Act that had put a lot of guidelines and regulations in place to protect the consumer. Okay, they've also done a lot with limiting the amount of money they could borrow up front. They did a lot to protect the non-borrowing spouse. So believe it or not, years ago, if you were 62 and your spouse wasn't, we would take that non-borrowing spouse off the loan and off the title of the home, right? As scary as that sounds. And what happened, right? The borrowing spouse would pass away, inevitably, pass away. And now that non-borrowing spouse would have no rights to the home.
Wow.
And then there were foreclosure and eviction issues, right?
Wow.
So as of 2013, they put provisions in to protect the non-borrowing spouse. They put provisions in to protect the homeowner, okay? So the whole idea behind the reverse mortgage today is if they can live in the house as their primary residence, 62 years of age, and if they pay their taxes and insurance, they can live in that house for the duration of their life. And if the spouse is not 62, they could also live in that house for the duration of their life, provided they pay the taxes and insurance, and and maintain the property to the best of their ability.
So now, how would one qualify?
Okay, so it has to be on your primary residence. One borrower has to be at least 62 years of age. Okay, you have to demonstrate the ability and the willingness to pay your bills. Most importantly, if you have a current mortgage that will be paying off, that needs to be paid on time. And you need to demonstrate the ability and the willingness to pay your taxes and your insurance. See, one of the biggest mistakes we made with the reverse mortgage years past, and that's why it had such a negative connotation, is we never looked at the borrower's ability and the willingness to pay their bills. So what did we do? We got somebody out of foreclosure, we paid their taxes, we kept them in the house thinking we're doing a good thing, right? But inevitably, a year down the road, 2 years down the road, they still didn't have the ability and the willingness to pay their bills or pay their taxes and insurance. So what we've done now in recent years is we've created financial assessment. So now we are going to look at your credit, we are going to look at your income, but on a financial assessment basis, do you demonstrate the ability and the willingness to pay your bills? Okay. And if you can do that, you would qualify for a reverse mortgage.
Now, when you say primary residence, because I have a lot of friends that go to Florida and such, primary residence is how many months in your home, that home?
6 months in a day, and it has to be
Okay.
your primary residence. Right.
Okay, got it. Got it. Okay. So now, what makes this like a hot topic today in today's challenging times?
Well, Lisa, you and I have been friends for a long time, and you've heard this before, but I talk a lot about the 18 risks now, 18 risks that can derail retirement. The number one issue is longevity. We're all afraid we're going to outlive our money. People laugh, and I say it all the time. If I retire today, okay, if I don't die by next Friday, I'm screwed, right? Because I'll have no money by next Friday, right? But longevity is a big issue with seniors today. They're afraid they're going to outlive their money. And that's the number one risk that can derail retirement. Mm-hmm. In today's environment, especially with COVID-19 and the way the stock market is reacting to it, right? It's like a roller coaster, right? Watching it go up and down. And in the interim, you're watching your portfolio erode. So, and they call that sequence of return risk. You think you have X amount of dollars saved to make it through your retirement years. But in an event like this, which is totally unprecedented, you could see that money evaporate quite rapidly. With the reverse mortgage, okay, we could help you mitigate that loss with the reverse mortgage line of credit, okay? And the idea is, if you watched your portfolio decrease, right? The worst thing you could do now is take more money out of it, because it's not going to have the ability to replenish it or recorrect itself, right? So the idea is set up that reverse mortgage as an emergency factor, like for the now what or the what if, and you need those available funds, that cash flow, that buffer to offset the losses in your portfolio.
So you're talking really about tax-free income. So how does it really work?
So with the reverse mortgage, the number one thing, if you have a mortgage, we would pay off that mortgage, right? And that would give you excess cash every month. Let's say, for example, you're paying $1,000 a month principal and interest. Right. Well, that gives you an extra $12,000 a year that you can spend on other stuff, okay? What I love most about the reverse mortgage is the line of credit, okay? So you're saying before, this whole subject is about tax-free money, right? So the idea behind the reverse mortgage is you can withdraw that home equity from your house, okay? There's $7.3 trillion of home equity in homes of homeowners that are over the age of 62, that they're not tapping into or they don't have access to it, okay? The ability of the reverse mortgage, it gives you access to that home equity, okay? And it's tax-free money. There's three ways you can collect this money. You could take a lump sum, which I wouldn't highly recommend. The idea is keep the line of credit there, use it when you need it, okay? You could also set up a monthly payment, monthly payout, One of the other 18 risks of retirement is loss of a spouse. So what happens when we lose a spouse? We may lose some of that income. We may lose the pension income. We may lose the Social Security income. With the use of a reverse mortgage, we could supplement that loss of income with a monthly payout from the reverse mortgage.
So people like me and retirees are confused about how different that is, or the advantages from a home equity loan.
Right.
So explain that a little bit so that we understand the benefits of this versus just, a home equity loan.
Lisa, thank you. That's a phenomenal question, right? I love this question. And I don't hear all that often because I do a presentation of comparing a traditional home equity line of credit versus a reverse mortgage line of credit, right? So think about it for a second. If you applied for a home equity line of credit today, I would need your pay stubs, W-2s, tax returns. I have to run your credit. Right. You'd have to have a specific FICO score.
Yep.
You'd have to be under a certain debt to income ratio. Okay. Any money you borrow from a home equity line of credit, you'd have to make monthly payments and pay that back. Okay. Especially in the environment we're in today. Okay. In the uncertainty. Okay. The lender that you have that home equity line of credit could reduce the amount of money. Right? They could cut your line, or they get shut off altogether. Okay, so how does that help you in the long run? It doesn't. So we have to look at your income, we look at your credit. You're obligated to make monthly payments, and the lender could shut it off or reduce it at any time. Okay, so it may or may not help you. What's exciting about the reverse mortgage line of credit is, yes, we are going to run your credit. Yes, we're going to look at income, but like as I mentioned before, it's more of a financial assessment. Do you have the ability and the willingness to pay your bills? Okay.
Right.
The next thing, okay, you're not obligated to make monthly payments. If you want
Uh-huh.
to make monthly payments towards it, you can, no problem. But you don't have to. The
Right.
other thing is, as long as you're living in the house, you're paying your
Yes.
taxes and insurance, okay, you're maintaining the property, the lender can never shut down or reduce that line of credit. Now, here's the best part, and this is the part I love the most about the reverse mortgage line of credit. The reverse mortgage line of credit has a guaranteed growth rate factor to it. What does that mean? Okay, that means the longer you keep that money on your line of credit, the more money we'll give you to use. Okay, like a credit card will extend, it'll give you additional money towards your credit card, right? So the line of credit, reverse mortgage line of credit, if you have let's say for example, you have $100,000 in your reverse mortgage line of credit. If you don't touch it and don't use it, in 12 months, you could have $103,000 or $104,000 on that line of credit. Just think about how much money will be there in 5 years, 10 years, or 20 years when you need it for that emergency.
Mm-hmm.
Right? Whether it be a long-term care situation or converting your house for handicap accessibility or just emergency, like what's going on now, right? Be able to withdraw those funds tax-free and leave your portfolio alone. Let it do what it has to do. Let your financial planner manage that to the best of his or her ability. And if you do this right with the reverse mortgage, you could probably leave a bigger legacy for your children.
Mm-hmm. So when you are selling your house, then it's a loan back to you? How does that work?
Okay, so I tell people all the time, 4 simple words. A reverse mortgage in 4 simple words, it's just a mortgage. Okay? Just like a forward mortgage, right? When you closed in your home, you went to a closing. You signed a promissory note promising to make monthly payments for the next 30 years, right? Okay? With a reverse mortgage, you're basically doing the same thing. You go to a closing, you're going to sign a promissory note, and all you're saying is, I'm going to pay this mortgage back with accrued interest, of course. I'm going to pay this loan back when I sell the home or when the last surviving spouse passes away. Okay. And the best part about the reverse mortgage, okay, the home equity conversion mortgage, it's a non-recourse loan. So what does that mean, Lisa? That means you, your family, your estate are not personally responsible to pay that loan back. The sale of your home is responsible to pay that loan back.
Mm-hmm. But we're still the owners of the house, right?
Still, yes. So
okay.
You still
people ask me this all the time.
Yeah.
Okay.
Well, because years ago we would take people off title if you weren't 62.
Yes.
Right? So now you're staying on title. It's your home. You can do anything you want with it. You can renovate it. You can remodel it. You can redo the kitchen, redo the bathrooms, and you can sell it at any time. There's no prepayment penalties. It's your home. The whole premise of the reverse mortgage is to help you age in place, maintain financial independence, and if it's done right, if it's planned right with, for example, me as a certified reverse mortgage professional, with the maybe your accountant or your financial planner or your elder law attorney, I would recommend we did it together, right? Not as a one-shot deal, right? But as an overall plan for your retirement. And if it's done right, again, like I said before, you can leave a bigger legacy for your children.
Mm-hmm. Well, we could spend lots of hours on this. This is really interesting, especially for people my age, retirement age, and trying to figure out how we're going to afford retirement. And living in our house and all. So what do you think the two biggest takeaways are for people to consider this and focus on for reverse mortgages?
I'm going to give you 3 of them. Number 1, you always maintain home ownership of your home, right, which we already discussed. The other 2 options, and I could spend hours on it, is the non-recourse feature. Okay. Reason being is, okay, if the reverse mortgage ever exceeded the value of the home, which could very well happen, okay, sure. You're only responsible to pay back the portion of the mortgage that the house sells for. So you're not leaving any debt for your children. So number 1 is non-recourse. You're not personally responsible for the debt. The number 2 biggest selling feature of a reverse mortgage is the line of credit and that guaranteed growth rate factor. Okay, the whole idea that that's giving you access to more funds as it stays on that line later in life is key. I have a borrower out in East Hampton. He has $1 million house. He has no mortgage on the property. He's taking out a reverse mortgage specifically for that. he qualifies for a $300,000 line of credit. In 10 years, that line of credit could be well over $500,000. And the reason he's doing that is because he doesn't want to touch the money in his portfolio. He wants to leave that for his children. And he wants to use this reverse mortgage almost as if his long-term care policy, right? If and when he needs money for long-term care. So my two biggest takeaways of the reverse mortgage is the non-recourse feature and the guaranteed growth rate on the line of credit.
I didn't ask how long this process takes. So how long from the first application to the closing on it?
Okay. So on a relatively simple process, okay, I can't do anything as a lender until the borrower takes a third-party independent counseling session. So from that point, when that borrower takes that counseling session and they call me up and say, hey, Tim, I'm ready to go. I want to move forward. No longer than a traditional conventional mortgage or an FHA mortgage. We order title, we order appraisal, we order payoffs, we can collect the balance of the conditions, and there's no reason why we can't have that loan closed and funded within 30 days. But the counseling session is key because that's what really starts the clock.
So that's with a mortgage counselor? Who's that with?
It's a third-party independent counseling session. So when I hand you that application process package, there's a page in there of counselors that you have to call, and you pick one of them off the page, make a phone call. It's a phone conversation. Okay, you do it over the phone, and then once that counseling is complete, you get a certificate. You sign it, and you send it back to me. Then at that point in time, I can move forward with the reverse mortgage process.
And do you know what the cost is of that kind of counseling session?
Great question, because people ask me all the time about reverse mortgage and what the costs are, right? So there are two out-of-pocket, there's stuff on my screen. There's two out-of-pocket costs for the borrower. Number one is the counseling fee, which is $125.
Okay.
The second fee that they would pay out of pocket would be the appraisal. And that ranges anywhere from $500 to $575, depending on where and what type of house it is, right?
Okay.
But those are the two fees they pay for out of pocket. Everything else comes out of the proceeds of the loan. Okay, so you would have to pay that back basically until you sell the home or the last surviving spouse passes away. But those are the two fees you pay for out of pocket: the counseling and the appraisal.
Great, great. A lot of information, a lot of great opportunities for people to consider, especially in our 62 and older population. People are living longer, so we talk about this all the time, my friends and I. So it's something to really consider. I want to make sure that everybody who has additional questions can reach you. I'm going to put your contact information on the screen and put it there for a few minutes. It's been such a pleasure speaking with you, Tim, and such important information. We also appreciate your support on our board of Equity First Foundation. We see you as such an important person to bring additional information, and you're always active in all the things that we do as well, events and all. So we thank you for that too. Let me put the information up on the screen.
Lisa, thank you for the time. I really appreciate it. Thank you.
It's been my pleasure. Okay, so the information for Tim follows. He's Director of Business Development. He's a certified reverse mortgage professional. His office number is 631-750-0520. His mobile number, and don't hesitate to call him, is 516-729-6040. His email address is tim.kennedy@usmortgage.com. The website address is www.usmortgage.com/Tim.Kennedy. You can see his address, but we don't need that right now. He has his license number. He's also licensed in Florida. So those of you who have friends and family down in Florida, it's something important for you to know. And all this information is important so that you can follow up with him. I'm sure he will answer all of your additional questions. I'll leave that up for another second for all of you to see.
So Lisa, my goal obviously is to educate and promote the reverse mortgage as a tax efficient retirement income tool. My other goal is to educate and dispel the myths about the negativity of a reverse mortgage. It's actually a great tool these days, especially in the environment we're in, the coronavirus and everything else going on.
Absolutely. Tim, we really appreciate your time. Thank you so very much. And I hope some people will get in contact with you. This is a very important topic.
Great. Thank you. Thank you for having me. Have a great day.
You too. Take good care. Bye-bye.